You are listening to ChartingWealth.com for Tuesday, the 7th of March, 2017. Let's jump right into the markets. We have a completed two-day candle that is a red open box spinning top for the S&P 500. In fact, it's down today along with every single one of the ETFs we review. That is, the S&P 500 is depicted by SPY, QQQ, which is the NASDAQ 100, GLD, which is gold, and TLT, which are bonds. So let's talk about that spinning red top. It means indecision. We are still above our two-day and our weekly trend lines, but we can see as we zoom way out that our PPO, and it is so hard because it is so high, we have to zoom way, way out to find it, is actually running parallel, which means, of course, that we have seen a considerable pullback to flatten out our price percent oscillator. We also see derivative oscillator losing energy as our light green boxes continue to diminish in size since they peaked on the two-day candle ending on Friday the 24th of February. So we do have a warning bell going off to everyone who has been riding the S&P 500 going up. So just be cognizant of that. When we look a little more in depth, we see our 2-hour chart rotated over back at 4 p.m. on Thursday, the 2nd of March. And if we range out to our weekly chart, we see again that it is starting to create a candle, in fact, punching through the weekly trend line. It's starting to create a candle going down, a red open box candle for the week. Now, it's just Monday, so that's just 1/5 of that candle just forming. Doesn't mean a whole lot to us now except to pay attention to derivative oscillators, of course, continuing to move up. So we'll continue to watch that. Technically, down 0.28% for the day on the S&P 500. The Qs, the NASDAQ 100, are down 0.21. We've seen some warning signs earlier back on the two-day candle that was a red open box with both top and bottom wicks back on the two-day candle on Friday the 24th of February. And what do we see going on? Well, we had another one on the 28th, and we had lots of up movement on the two-day candle ending on Thursday the 2nd, and then this latest two-day candle is now yet again another spinning top as we saw back on the 28th of February. So warning signs there, closed above the two-day trend line, but getting close to it, still well above the weekly. We do see the derivative oscillator losing lots of energy, and the MACD moving, the PPO, the price percent oscillator, very similar to the MACD. You want to know what it's really about, listen to our training that we prepared for you online. But we have the PPO heading toward the signal line. So again, if you're still in the Qs trade, just be careful and consider pulling yourself out, specifically if it does cross over on the two-day trend line. Be very, very cognizant of that. We see on the 2-hour, it crossed over in the afternoon back on Thursday the 2nd. So again, popped up toward the end of the day, but still down for the day. So continue to watch yourself, still above the two-day trend line, but some warning bells going off there with some weakening. So we shall see. Now let's move on to TLT, down 0.47%, about double what our stock indexes were. TLT is the 20-year Treasury bond. It has not yet crossed over on the two-day chart, but seems to be getting extremely close, of course, on the weekly chart. It is losing energy on the derivative oscillator, has not yet crossed over there either, has broken through, of course, the two-day trend line. We don't have a weekly trend line because the movement has been very flat on that weekly chart. So we don't have one at this point. Now let's continue, well, and we'll also take a quick glance at what's going on with the 2-hour. We see that the market has been sliding sideways, trying to cross over going up, but we can't put a whole lot of hope in that right now because when you have sideways sliding, it makes the MACD or the PPO not be nearly as accurate as you need. Derivative oscillator has rotated over, but again, the sideways slide takes a lot of energy out of the value of the PPO that it typically has. We need moving stocks, moving ETFs for the PPO to really come in line for us. It's hard to see much when a market's not trending. That's where we are on TLT. Now let's go back to our 2-day chart, and lastly check out gold, down the most of all 4 of our ETFs. Gold is down 0.66%, getting very close to crossing over on that 2-day chart, going down. Derivative oscillator has already crossed over. Gold, it's the second candle, second two-day candle. We have 2 2-day candles going down and penetrating the weekly. So again, lots of warning bells there if you've not already gotten out of gold once it penetrated that 2-day trend line. We have seen it continue to move down, so be very, very careful in gold. We sure had a wonderful ride with it, and if you're not already out, again, pay close attention. You probably should not be in at this point. Again, if it confirmed crosses over going down, definitely need to pull the trigger and get out at that point. 2-hour chart, again, that sideways trending, crossed over going down on, the 2-hour chart back at 10 a.m. on, that was Tuesday, the 28th of February. So gold has long since peaked. Now, that is where we are on the charts as we end the day on Monday, as we go into Tuesday, the 7th of March. We appreciate you being with us. If you want to understand what it is we really do here, well, there's lots of great training at our website, chartingwealth.com. But what you really need to do, sign up for our newsletter. What do you get with that? You get our How to Read a Stock Chart video. You get our weekly and our daily summary worksheets that we use, and they are incredibly valuable to you. We have great training at the website, teaches you how to use those. In addition, we share with you the layout that we use at freestockcharts.com. All of this is for free. You just have to sign up for our newsletter. If you appreciate what we do, we of course appreciate you going and subscribing to us at iTunes, giving us a 5-star rating, saying something nice about us. I noticed last night that we were number 9, I think, in the world for stock trading podcasts. We've been as high as number 6 for stock market podcasts. You guys have really helped us, and we so much appreciate your assistance in those metrics. Subscribing does move us up. We want to be number 1. We work hard to earn your trust and help. So please help us out with that if you can and if you will. Also, we're almost to the 2,000 mark of subscribers on YouTube. So please go to YouTube and subscribe. We always love to hear from you. You can go to Charting Wealth and write us from there. Of course, you can always email us directly, cw@chartingwealth.com. That's CW as in Charting Wealth, cw@chartingwealth.com. And lastly, if you're not already signed up to receive our notifications when we have weekly vertical crossovers, those are the keys to really watching your virtual trading accounts skyrocket. That's what we've been using lately to much success. You need to go on your cell phone, go to your text messaging, put in the number 33222, that's 33222, and text the words Charting Wealth. That's what we're called, Charting Wealth, one word. Text that to that number 33222. You will then sign up and receive our notifications when we have weekly vertical crossovers. You'll receive no more than 6 of those a month. And again, we've only sent out 1 since we started the service about 2 weeks ago, and we will sure send those to you when it is necessary, and it will be well worth your while for your practice trading. Remember, we're not a stock calling service. We're an education firm. We want you to train with us to learn how these markets work, to learn how to read stock charts, and we are here to help you do that, whether you're a value investor, however you might be a trader, whatever it is, you need to know what we can teach you, and that is reading stock charts. That is the key to making sure that you are doing all you can to understand what's going on in the market. They say on Wall Street, you buy on the rumor, you sell on the news. Well, you can watch things happen real time with the charts. You don't have to pay attention to the media noise. In fact, we don't. We pay attention to what the charts are telling us because they show price movement. And with the kind of indicators and the knowledge that we teach you, you can help portend and foretell what's going on, or as we do, what we really count on is riding waves. That is trend following. That is the key. That's what we really teach. So join us every day. Go to chartingwealth.com, sign up for our newsletter. God bless. We'll keep you posted every single day the markets are open. God bless. Take care from chartingwealth.com.